Hold on a second. There's a war happening right now. Missiles are hitting gas fields. Crude oil has shot above $100 a barrel. Markets are bleeding. The rupee just hit a record low, slipping past 93 to a dollar. And in the middle of all this chaos, gold, the ultimate safe haven, is falling. You should be confused right now because your entire life you've been told when there's war, when there's panic, when the world is afraid, gold goes up. So if there's a war and an oil shock, why is gold suddenly down? In this episode, we are going to decode why gold actually falls when war begins, the invisible loop connecting oil, the dollar and your gold, and what China is quietly doing while retail investors panic. Let's start with the numbers. Earlier this year, gold touched record territory, above $5,400 an ounce globally. But since late February, after the US strikes on Iran, gold has pulled back. It hit a 1-month low, dropping to around $4,700 an ounce before bouncing slightly. On the MCX, it's down to approximately 1,50,000 rupees. Prices haven't crashed, but they have completely defied the simple story of war equals gold going up. To understand why, you need to understand the difference between two very different behaviors, risk versus chaos. When investors see risk like inflation or a currency losing its purchasing power, gold rises. That's what happened in 2025. The dollar was losing value and investors swapped declining paper for physical assets. It was like a currency swap. But chaos hits different. Chaos is when nations suddenly need to survive. They need to feed populations, finance a war, or secure energy. When the system shifts from risk to chaos, gold stops acting like a safe haven. It becomes an emergency collateral, like selling your last piece of gold just to keep the house running. That's what a country does too. In crisis mode, nations stop being strategic and start becoming forced sellers. They discreetly instruct bullion banks to sell gold into the global market to get usable currencies. The gold floods the system, and when nations are desperate to sell, buyers don't play fair. They drive prices lower to get a better deal. And that's exactly what's happening right now. Most analysts will give you 3 separate reasons for why gold is falling. The US Fed keeping interest rates high, liquidity selling because of margin calls, and the fact that this is an oil shock. But these aren't 3 separate forces. They are one continuous loop. And here is the chain of logic. Right now, the most important commodity in the world is oil. And most of it still trades in US dollars. With the Strait of Hormuz effectively choked and the Middle East at war, buyers are being forced towards non-Gulf suppliers like United States, which is already a major oil exporter. But what do many of those countries who have to buy this oil already have in their reserves? Gold. When a country needs dollars to pay for oil and it runs low on cash, the fastest move it can make is to sell gold into the market for US dollars. The result? Gold prices face downward pressure while the dollar strengthens. Add to this the fact that the US Fed Reserve left interest rates unchanged at approximately 3.5%. That keeps the dollar incredibly strong. Higher oil prices result in greater dollar demand. Greater dollar demand results in countries selling gold. Selling gold results in lower gold prices. So the US, already a very big oil exporter, is selling expensive oil into the world where gold in dollar terms is temporarily cheap. Now here's the part almost nobody on mainstream TV is talking about. While social media screams that gold is failing and retail investors are panic selling, one major player is calmly doing the exact opposite. China. The People's Bank of China has been increasing its gold reserves for 16 straight months. In February 2026 alone, they added 30,000 ounces of gold, roughly 1 ton. Official holdings are now at a record 2,309 tons, worth somewhere around $380 billion. Gold now accounts for roughly 10% of China's reported foreign exchange reserves, and that share has doubled over the last couple of years. A massive amount of Chinese gold flows through the Shanghai Gold Exchange, the SGE, and the SGE has one critical rule. Once metal leaves an approved vault, it cannot be redeposited as an exchange metal. It permanently exits the system. It becomes invisible to the auditors, and that's why analysts at major banks believe that China's true gold exposure is significantly higher than the official number. The question then is, why are they doing this? Well, it's a deliberate diversification away from the dollar. It's an insurance policy against a future where US assets might not be unquestioned core of the global system. Think about this. While retail investors sell the dips, a major global power is using this chaos to quietly accumulate real assets. So where does India fit into this? And more importantly, what should you do? Indian households are estimated to hold around 25,000 tons of gold, more than any central bank on this planet. For us, gold isn't just an investment line. It's culture, security, and an emergency buffer for when things go wrong. So what do you do when gold falls during a war? First, don't confuse a short-term liquidity squeeze with the long-term story. Wars are expensive. They push governments into bigger deficits and often bring higher inflation later. Conditions that have been historically very good for gold over multi-year periods. Second, if you're investing, think in years, not headlines. Physical gold and sovereign gold bonds are built for that horizon in a way that leveraged paper trades are not. Third, watch behavior, not noise. Retail investors tend to panic, sell low and buy high. Strategic players, including entire countries, usually use those panics to accumulate. Gold hasn't failed us. It's doing what it usually does, acting as a collateral and comfort during chaos. Like for us, similarly for governments. So ask yourself, are you trading in fear or stacking in silence? I'm Yashodhara and this is DeKoder. If this helped you see past the headlines, hit the like button, share it with someone who owns gold, and subscribe. Because next week, we are decoding another story that will directly affect your pocket. Until then, stay smart and stay informed.